If you are a first-time home buyer or moderate income buyer and you're using a conventional loan in 2026, please don't scroll past this video because I'm going to tell you something that could save you hundreds, if not thousands of dollars at the closing table. Most folks that are using a conventional loan have never heard of the two programs that I'm about to teach you about in this video. And those programs are called HomeReady and Home Possible. And for the right person, these programs can give you a lower interest rate, reduce private mortgage insurance, lower down payment options, and easier qualifications in certain situations. Now, what are HomeReady and Home Possible programs? These are affordable housing programs backed by Fannie Mae and Freddie Mac. They are designed especially to help low to moderate income buyers purchase a primary residence with just 3% down with a lower mortgage payment. One of the biggest advantages of this program that nobody's talking about is that the private mortgage insurance that we all hate so much is substantially cheaper than the conventional loan, the standard conventional loan. And over time, we both know that that can save you hundreds of thousands of dollars. So with all that being said, how do you get approved? The first step is you got to make sure that your income qualifies for the program. These programs are designed for low to moderate income households. So in many areas, your qualifying income must be at 80% or less of the area median income. And you can use Google, just type in Fannie Mae income limit AMI. The first website that pops up, you type in the address of the house you want, it'll tell you the limit, how much money you need to make to be able to qualify for the program. And if your income is at 80% or less, then your income qualifies and you should be good to go. Two, these programs only require 3% down. Now, they can be combined with a grant as little as 1% down, but the loan officer that you're working with must be able to offer that specialty program. If not, it'll be 3% down. The stronger your credit scores are, the better your interest rate, the better the pricing will be, and the lower the private mortgage insurance will be. But even if your credit score is not perfect, this is still a program worth exploring, especially if you're comparing it to an FHA loan. Step 3, and last but not least, is you must complete a home buyer education course. Most first-time home buyers will be required to complete this if you're using the program, but don't panic. Most of the time, this thing is free, and it's a silly, goofy course that you got to just click through the prompts, get through it. Most of the time, you can complete it within 1 to 2 hours. And then you'll get a certificate at the end stating you completed with your name on it. And that will satisfy one of the program's biggest requirements and move you one step closer to closing. If this is you and you're trying to decide whether or not a conventional loan or an FHA loan works, I do want you to at least look into the program to see if it works for you, to see if it makes more sense for you. Because I believe for a lot of home buyers in America, all over this country, this program is great and nobody's talking about it. So if you are working with a loan officer on a conventional